Hello, family. Happy Sunday, first of all, for being blessed. Secondly, game day for many of you who are enjoying the various games. Today, I wanted to give you an update 6 on my journey in using refinancing as a home loan, a HELOC, or all-in-one mortgage. A home loan HELOC will basically replace all the loans that I have into one and be fixed. You can also use a HELOC in which a funder provides you money in order to pay off your debt, consolidate your debt. I started looking at that. And then there's a product called an all-in-one in which it merges checking, savings, and your checking, savings, and your mortgage into one. I'm really looking at that. I've updated you previously on a video where major credit, military credit union is hopefully providing me some funding. In general, I asked for 140. We had to lower it because of some of my personal and business liabilities. So now I'm gonna just go ahead and share my screen so that we can look at my budget and how we'll be using the all-in-one product if I'm able to establish one. So hopefully I can get this done before the end of the month. And what I'm looking at is for the all-in-one is a product where you take all your deposits, all your checks, all your bill money, put it in, and then before the end of the month, you you take it out and it helps to lower your principal versus the fixed 30-year mortgages that I currently have, which are 3. So my monthly salary from the job, I'm bringing in $3,234.94. I do some consultations, but after reading some of the disclosures from the credit union, I had to remove that. Rents from 3 properties that I have. Excuse me. Okay, rents from 3 properties that I have totaling about $2,000 a month. I have $300 in savings that's sitting there, not doing anything. So I have a total of $534.94 of incoming funds that can be deposited and sit into my account for this all-in-one. Now, my outgoing are the 3 properties, just the principal and interest, 1,071. I also pay escrow to the mortgage companies for that currently. So that's about $991. And my monthly personal bills, including my rent and other bills, about 2610. My credit report bills are about 439. So the bills on my credit report that get monthly are about 439 on my personal side. That's not including my business side. That also does not include the student loans at the current time because I'm getting them adjusted to my income. So in general, for January, the incoming is about 5,534. The outgoing would be 3,711 for a surplus for this first month, 423, before I get more organized. And if I get approved for the HELOC, which I'm gonna try to use as an all-in-one product, dump my paycheck in, dump my other bills, then still my wages at 2,200. My consultations, I can now put it in, this is wages, and I will report them on my 2024 taxes so that they can see it. The rent's 3,300, so hopefully in general, I make sure all the rents are collected because I do manage all of my properties on my own. The escrows that I was sending to companies are now staying in the account, and also that 300 savings that I had also. So now my monthly income 8,025. Now my outgoing is the same principal and interest on the 3 properties. Escrow and taxes, again, as I said, I was paying $991 to the various banks, but now since I'm escrowing them, the properties are paid off. It should put $991 back into my pocket, back into the account and stay there. My monthly bills stay the same. I would say 2610 in general. and my credit report, I'm saying 439, so I'm gonna kind of keep that constant for now. So in general, for February, there will be 8,025 coming in, 4,120 going out. That equals that equals 3,095, 3,3,900, which is different and an improvement from the 423. All right, so I'm going to write down those two numbers, and now we're going to go over to an escrow calculator. So let me write down my incoming will be, sorry about that. My income is going to be 8,025.94. My outgoing is going to be 4,120. Okay. Let me stop sharing. And now I'm going to share again. Now, this is called the all-in-one simulator, and what it helps you to see that if you get an all-in-one mortgage versus the typical 30-year fixed mortgage, and I have another screen, that's why I'm kind of looking up, then this is what it is. Okay, so all three of my properties now total about 144. They did start off about 206,000 when I got them all between 2005 and 2010 during the market crash. I'm starting with the credit balance of 144, and that's saying the original balance, which I started off as a mortgage, saying that I was thinking about a 30-year mortgage, and then I went to some lenders. Now the current balance is still 144 because as a HELOC, I'm taking that on top of it and zeroing it out. Now the interest rate on the HELOC has a high and a low limit. So currently the low limit I think is like maybe 4.0. The high limit that it can get to is I think as high as 15%. So show the potential. I'm gonna just go ahead and put, I'm sorry, this is the current, the average current, let me go back. I'm sorry, the average current interest rate for my three properties are about 6.21. I'm sorry. Term is 30, and this will be a monthly payment, but my monthly payment is actually higher than that. I'm just going back and change that. So as we did, the monthly income earlier was 8,025 and 94. My monthly outgoing bills, 4120. And what I'm saying is that the interest rate for the HELOC can range from a high to low, or what they call a floor to a ceiling. And it's probably about 4% to 15%. For this exercise, I'm gonna go ahead and put in 15%, the highest that it can go, so we can compare the two. And also it could change monthly. But for the monthly variable interest rate, I'm gonna just go ahead and put in 1%, which is pretty high in general, but I really want to show how it can work at its highest apex or highest point. So if I use the HELOC and dump my paychecks in, then this is saying that in 1,537 days, my three mortgages are paid off versus me continuing down a 30-year path in which I picked them up in 2005, 2008, and 2009. The total interest that I would pay the bank at this point is 173, but I really started at 200,000, and that was more. I'll be paying back the bank 121%. In general, when you get a mortgage, is about 100% extra. The new interest that I'm saving with the HELOC strategy, 51,467, saving 122,000, and giving the tip, which is total interest paid. Okay, I know that was a lot, but just wanted to walk through with you the strategy that I'm using. All right, thank you very much. I hope you enjoy your blessed day today, and hopefully all you also your football enjoy the games. Please like and stop by. I'll be continuing giving you updates. Thank you very much. Everyone enjoy their day.